on Monday. Markets were closed, nothing happened, but I wanted to give you an update on what's been happening today. It's been a pretty eventful day with Jerome Powell, the head of the Federal Reserve, testifying before Congress that he believes that more rate hikes are most likely necessary in order to be sure that inflation gets back down to that 2% level. So we could see potentially another 50 basis points in rate hikes kind of spread out throughout the fall as we move forward. And hopefully that will start to show enough of an improvement in inflation and other data points to make the Federal Reserve comfortable to not continue to do that so they can avoid pushing us into a recession. Hopefully we can, if it's a recession, it's minor, but what we don't want is a major recession because of overdoing it on the rate hike front. So that's the big concern. Is the Fed still driving in the rearview mirror, or are they focused on how this is going to affect? Now, to Jerome Powell's credit, during his testimony today, he did mention to Congress that, hey, it's kind of like driving a car. We started out with 75 basis point hikes, then we went to 50 basis point hikes, then we did a series of 325 basis point hikes. He says it's kind of like driving 75 miles an hour on the freeway, slowing down to 50 on a local highway, and then slowing down to 25 when you're in town, getting closer to your destination. He says they don't plan to continue to do those rapid rate hikes like they did last year, but slow down as the data allows them to, and as they see things improving to allow us to have hopefully a softer landing. So again, they paused, right? I mentioned that you probably heard that for last week. They paused. There was no 25 basis point rate hike for this month. So we'll see what happens over the summer. But for now, they're pausing and kind of waiting to see what the effects are of the hikes they put into place already, which have been a lot, which have been drastic and fast over the past year. So let's take a look at the charts to see how this testimony from Jerome Powell affected things today. Okay, so here's what's happening. Universal mortgage-backed security is up by 2 basis points over the close from yesterday. So basically the same, basically unchanged from the close of yesterday. And the Dow or the S&P 500 is down a bit. 10-year Treasury is down 1 basis point in the yield, which is good. We want to see the 10-year Treasury yield fall because that is inversely correlated to the mortgage-backed security price, which is what we're looking at here on this chart. So we've basically been treading water right around this Fibonacci level for that past 2, almost 3 weeks. Can't quite get away from it. Well, I'm certainly hopeful that we can see some follow-through price improvement going up to these lines. It's going to be very difficult to get through this 50-day moving average and other Fibonacci levels here, 200-day moving average. There's a lot that would have to happen to push the mortgage-backed security pricing higher than that to get even better traction and better rates. But there's still some room here, right? We've got a good 30, maybe 40 basis points of improvement potential that could happen over the next few days. So that's what I'm looking forward to. I'll give you further updates next week as we go forward, but that's what's happening today in Rateland.